Morning, everybody. Hope you guys are doing well. I'm looking at NASDAQ this morning. Sent out the daily bias. We're kind of in a consolidation here. Looks somewhat like seek and destroy. I put on the Asian levels and such. You'll see. Do have Asian high. It's a nice external range. We're trading within an imbalance over here. I don't know if we'll reach all the way up there. I would actually like to see it either reach for premium in here and then go to previous day low. Or like I said, if you reach previous day low, then back up to premium. But we are sweeping sell side. The higher time frame dealing range is here. We have this obviously larger imbalance in premium and this one over here. So it's kind of 50-50 for me. We're just waiting for more data. I'm anticipating some sense of SMT between ES and NASDAQ. So if you look between these two right here, we're trading above the 905 high on ES and failing to get above there on NQ, 1 hour region above it. But no substantial SMT at the lows either. So we'll just wait for this 15-minute candle to close and then start hunting the 5-minute setups. But I do like the fact that we trade into a 15-minute imbalance. You can look for your, obviously, your 5-minute candle closing bearishly, and then 1-minute sibi entry targeting the previous day low, which would be a form of external range liquidity. We do have 8:30 news tomorrow, so we can expect somewhat lower conditions, low probability conditions today. We could get those two profiles from the AM, I don't know what it's called, the AM model PDF, theta and beta. So two options. You could either use the 950 macro to anticipate the 10 a.m. news and get in like that, or wait till after 10:30. And a lot of times 10:30 will create another kind of Judas swing and a continuation going into lunch. So I'll start marking these out really quickly. So it's either stay patient or we got to find a good setup. We're still holding a little bit of that SMT. But look at ES, we'll be trading all the way above that balance up here, trying to reach all the way into this. Looks like And we also put in relative equal lows right on the PM session low. So look at the failure to sweep this. And even 930 didn't take this out and reverse the other way. So consolidation here on the 1 minute means there's going to be a 15-minute wick, right? Relative equal lows. We can target as external range. If we take our current dealing range here on ES, we look in premium. We have this imbalance here. We also have this imbalance all the way up here. We're trading to the premium end of the 5-minute or 15-minute fair value gap. Go back to NASDAQ. You can see the SMT at the highs. It's not, if you want to use this one, you can. But bearish SMT up at the highs. We just need this 5-minute candle to print bearishly, and then we can look for. We do have London session low here too. It's not really a clear 1 hour. If I put this one on here, here's lunch low. It's not really a clear 1 hour low. And do we have 5-minute consolidation in there? Okay, we do have 5-minute consolidation there. So I guess we could use this as a target. Visual consolidation there on the 5-minute paired with a 1 hour PD array. There's not even a gap, I don't think. Yeah, there's no gap. So look for this consolidation to hold. Sorry, this fair value gap to hold up here. And then the standard ATM model short. Did trade above this breaker and imbalance, but that's fine. Got a stop run above this high. We don't have a lot of inefficiencies here besides this one that could slow down price. So it could actually just aggressively run through these wicks in here like it's doing. If this 5-minute candle prints bearishly, we do have this 5-minute fair value gap and this 5-minute fair value gap here. So I am watching some of that. But notice how if we were going to premium bounce, we would have to take sell side first, right? ERL to then IRL and premium. That's your sell side to premium run. We did not take any sell side on NASDAQ. We did not take any sell side on ES. So the fact that we ran aggressively up into premium first with the 930 Judah swing, to me, we can anticipate a sell side run, either below lunch lows or below possibly previous day low. So we're going to wait for this candle to displace. Preferably we can get through 50% of this larger 5-minute imbalance. 15-minute candle looks good. Tapped into the reclaim for value up here. If I pull up the 15-minute chart on the left side, you'll see it. So this larger 15-minute imbalance is the gray one in this. And we're displacing away nicely from that. Tiny imbalance in there. Five-minute candle still needs to close, so we're gonna wait. 10 a.m. I think we have news, right? 10 a.m. news. We had 8:15 news as well, which is not really anything important. Holding the premium side of this 15-minute imbalance as well on ES. Projecting off OTE. Let's see. Yep, right off there perfectly. So if you manage to close this below 705, that's also a good sign. That's your bearish OTE, right? Candle buy should be holding this middle line in OTE. And wicks preferably can stay within this 786 and 618. So we closed in that tiny imbalance that was forming. We have a VI up here in premium. I guess this would be your breaker. Very tiny breaker, but if you wanted to use this as one, you have a, lower time frames, high, low, higher, high. And this is your last down closing candle range that creates the run up to take liquidity. So there's your 5-minute candle closing bearishly. Only premium bounce I'm looking at is, potentially that breaker if we do trade back up into that. but there's really no clean entry yet. You can be targeting previous day low. Obviously, this 928 low sells the liquidity. I'm going to mark out the launch levels as well. That'll be important. Screenshot this. Yeah, no fair value ups there. Just this tiny VI. So it technically is a premium PD array. So you want to get all the way up into there. That would be also in premium of this dealing range here. But like I said, there's not really a lot of attritions going on within this wicking range here. If we are bearish as well, look at this last up closing candle on the 5 minute to be held as a CISD point. Held a 1 minute order block as well. That's true. Got this one right here. Up in premium. I'd like to see it reach a little bit up in the premium there. Remove this, but yeah, watch that 939 candle. We are failing to get up into premium, so it looks like this breaker is holding. Notice how we have a breaker, the order block range that taps into the breaker. This order block range normally creates the second stage of distribution in a market maker sell model. So if you go and study there's your VI fill. You go and study your market maker sell models. Most times when we form a order block range, something like this, see how we have a sweep above the buy side, reaches into the hourly imbalance. We have this down closing candle range. Use this one specifically. Is your bearish breaker. Extend that out. Now there's an up closing candle range that taps into a fair value gap here. This is your first stage of distribution, right? You got your low risk sell up in there, bridge market structure, fair value gap, short. Trades down, confirms the breaker, trades up into that. It's your first stage of distribution. And then this order block range that's formed as we fill the breaker and fill this fair value gap as we trade away from it. When price then taps back into that level and taps back into another fair value gap, preferably, this creates your second stage of distribution, your silver bullet, where then price will aggressively run towards your target with very little retracements. And these are probably the best entries you can get within the MMXM and MBM. So look for, obviously you have 1, 2, 3 entries. Your third entry, as long as you didn't take liquidity by then, is going to be your most powerful, especially if it's happening above 50% of the range. So we're still in premium here and we're shorting that. That would be a nice run aggressively lower. It's obviously before your kill zone. But if you're able to get in that, that's a nice run there. So we're holding this volume balance, holding the breaker. Let's check over the ES. Still have not displaced or broke market structure yet. I'd like to see displacement preferably through this low. There we go. Nasdaq trading lower, holding this bearish CISD. I would assume lunch low and previous day low are targets. That's your external range, right? I do have a video on CISD. It's not an official one. It's in a old back testing video. I'm not sure exactly what it is specifically. You shoot me a DM after the stream. I'll try see if I can find it, but it should be in one of the back testing. It's either the 10 a.m. reversal video or something about like in-depth market maker models. I'm not exactly sure. I need to post the stream recording from yesterday as well. So I'll make sure to post that one and this one today. We can see we have no sibi yet, right? We're trading in premium, we're filling this volume imbalance, but no sibi is formed after we've closed this 5-minute candle. I am watching the fact that we're trading within this bisi here, right? So if we do displace again above the high, then you could look for, I guess this premium imbalance up here on the 5-minute chart, but I would not like that. Normally, when London low and London high are both taken, excuse me, before your equities open, you're going to have an ERL run to an IRL run, or just chop your price action like this, where we're kind of moving back and forth. We do have, trying to check it, we do have Fed Chair Powell speaking at 12:10 p.m. So before then, we could get choppy price action as well. So we have 8:30 news tomorrow. We have Fed Chair speaking at 12, and we have it's obviously NFP protocol. So PM session is going to be rough, and we have London session high and low taken. So it's a very sketchy environment for me to be in, at least. We're within macro time. Yes, is not broken market structure to the downside either. Trying to look for SMT at the lows. I guess we have a tiny one at the 925 candle, but I'm not too interested in that. Can move this volume bounce as well. Really, our last PD array in the matrix is a rejection block, and then an old high. So we are holding the rejection block up here. It's a very risky short, though. And I can scan the 15-minute chart or 15-second chart, but I don't think there's going to be anything in there either. Yeah. Just wicks and chop. We do have some bullish order flow here. Holding this. Let's see how we hold this 48 and 49 candle. Another bearish SMT. ES is climbing above the 930 15-minute candle. 945 candle failing to get higher right now. So if I remove this one, look between these highs, another SMT. Yeah, nothing in here. I agree. I would say best to probably wait till 10:30 or 11, around that range. If you can get something in there that's a little bit better, but nothing in here. I mean, if you see something in here, I don't know. It's extremely 50-50. We're trading within a 5-minute candle. 5-minute fair value gap, 1-minute order flow holding somewhat bullishly. We also have a ATM model short that's starting to form with SMT at the highs. We can check on what DXY is doing. It's somewhat in a sell model. We are at previous day low already. Oh, we do have bearish. Okay. We have some bearish fair value gaps and PD raise. Like in here, 5-minute consolidation, there's going to be a 1-hour fair value gap probably below that or a swing low. Tiny fair value gap right there. So if we continue to shoot towards this discounted balance, then look for higher prices on indices. But I mean, CL pretty choppy as well. Euro USD is bullish, so I would assume. I just don't like if ES had ran through the lunch lows, but we just put in relative lows on every single one of these. 54, 54, yeah. So if this had pierced it right at 930, if we got like a Judas swing like this, and then started breaking up, then sure, that would be a nice, SMT as well. But this consolidation down here to me is too smooth, especially on a time-based liquidity ERL. We'll still keep this market structure shift line. If we break through that, then NASDAQ is holding the rejection block. And we have not formed any. If we do form a sibi in here, you can look at this as another tiny market maker sell model, at least down to the 945 low. Yeah, no problem. Done with work already. We'll see you tomorrow. Tiny imbalance starting to form. We have 3 minutes till the news. It is definitely a scalping kind of day, though. Holding the previous day low is, would be a preferred target. I don't think we'll get all the way down there, though. At least not with this PA. And it's immediately closing that imbalance there. I mean, Q, we took the high. Yeah, there's sometimes some SMT between those. That's why I like charting on NASDAQ, even if I do take something on micros. Watch how we hold this 945 bullish order block. Are we in premium of this range yet? Yeah, we are. There's not even an inversion gap we can use in this range. If price wants to reject that, but you could look at this maybe as old selling. See how we close below it. See if DXY is trading back up. Nope. I'll fill a VI down here. A lot of chop this morning. We'll probably see that all the way up until 12, 12:15, 12:10. So watch how we hold this old selling. No 2-minute gap. I mean, there may be a 2-minute gap forming there, but nope, never mind. I mean, look at this 3-minute candle range. We've just been, this is the definition of consolidation right there. Boom, 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 looking back and forth, staying within a tight range, open and close. Nasty PA. Here's the news. And there you go. No clear long setup, I would think. So DXY shooting lower. Here's your bounce fill we got. This is a problem. I'd like to see a return back up into there, especially intraday. When we have a gap like this intraday on a news driver, this will most likely be filled. Your SD shooting up. There's your ES, market maker buy model, I guess, completed. But no indication we wanted to reach higher besides this 5-minute order flow, which, you know, you wouldn't even be able to tell until this 955 candle closed. Then you could get some grasp, but no 1-minute order block for value gap. You could have traded into old selling disrespected, obviously. Reaching above for Asian high. Just tag that, but I'd like to see external range up here met. There's no setup, no trade, right? So if I were to have just gone short off of the old selling or just the feeling that it was going to hold this fair value gap, would have been stupid. And that just comes with trusting your model, right? So you may have three of the things. We have a 15-minute fair value gap. We had a 5-minute candle close bearishly, and no 1 minute to be printed within this range at all. So you can't just enter off an order block. You can't switch the rules just because this price action is not giving you something that you think you're owed. If it's not showing you your model, that means it's either low probability or it's not something you want to be in the first place. Here it reaches up for ERL. So completely wrong there. Ridiculous gamble question. Does it make sense that once the 1 minute closes above old selling, you could treat that as a Judas for the bullish move into news? With the 959 candle, no, you couldn't. Because we had this technically as a bearish breaker on lower time frames, and we had this candle here, which could be used as your CISD. Both of which, you know, we could have hit news and just shot lower off that. Good question though. It depends on which one you wanted to pick as the breaker. If you wanted to pick this one as the breaker, then yes. I mean, not even, because this candle closing within the mean threshold of the breaker is fine. That's a rough trade. The only, I think, way you'd be able to go long off that is if you're looking at the 5-minute chart. But notice how 930 did not even print a Judas swing. 930 prints up, trades back down, fills the gap. Trades up, prints back down, fills the order block, mean threshold, holds that, and then shoots up. So there's no Judas swing in this, which is a void model. And there's not a clean setup until right at 955. Like, you would not be able to, if this candle closed all the way down here, you would assume bearishness. If it closed, you know, with right here where it did, you extend this 5-minute order block out. That's pretty hard to tell, right? There's your external range liquidity hit. Yeah, nothing at all. And hopefully this shows you that you don't have to be in every move, right? Like, yeah, this move was 85, 90 points. It would have been nice, but everything outside of a model is noise. Obviously, like when you come to the charts in the morning, are you looking at what London did and you're upset about London session? Oh, there's a nice market maker sell model in here. I can't believe I missed it. Look at those relative equal lows. It was such a clean setup. Or you're not looking at Asian session. Oh, I missed that short down into PM session low. Just like in the AM session, it's the same thing. So if it's outside of your model, just like how London sessions, Asian session are outside of a time-based model, this is just a price model within a time zone. So yeah, it may line up with your correct time, but if the price isn't showing what you want, then that's just noise as well. There's no reason to feel FOMO or feel like you have to, just because it hits 930, you're expected to move. Right? Like a Mason's over there just left because there was no 950 macro trade, which is his model. He looks just for 950 macro, maybe for 850 macro, and then if there's no setup, he's done with the day. And it's a great example of what you should be doing is if you don't have any clean setup, even within your time zone, that doesn't mean that you're owed a trade. Just because the clock hits that time, it's not, oh, we're now immediately hunting for something. And looking at the economic calendar also helps with that. If you can predict which days your model will be there, it's even more helpful. You can basically just show up on the days that you got to work, and all the other days you don't have to show up. Like something like today, even tomorrow, I'm still going to show up tomorrow, still going to show up Friday. But a day like today, I would say just avoid completely, especially when we have Fed chairs speaking at 12. That normally creates choppy price action all throughout up until around maybe 11 o'clock, 12 o'clock. There's no Nifty macro today because we were in consolidation. I mean, there was still a macro, technically, right? Like if you look at the 955 candle, we did technically dip into a 5-minute imbalance over here. And if you go to, strip it down, 4-minute, there's a timing imbalance there, 3-minute, 2-minute, 1-minute. But understand that the macro runs a set of instructions. So sometimes the set of instructions are going to be, if we have 10 a.m. news, then we're going to consolidate beforehand because it's consolidation expansion. And that's harder to read, obviously. Some days it'll be, okay, we're in a simple, think about the 4 stages of price delivery. It's either going to be consolidation, expansion, retracement, or reversal. So sometimes you'll get a macro where it's reversing right at 950. You get a low risk buy right within, maybe 1003 and 1010. And the highest probability 950 macros are either going to be your consolidations or, sorry, not consolidation, expansion. So continued expansion. We already have a reversal between 940 and really between 930 and 945. Trades lower, and then you have a continuation, one of these two, this one or this one, or we're reversing right at 945, maybe 950-ish, and you get your low risk sell right in here. Anything else besides those, I would say don't even worry about trading the 950 macro because it's going to be rough like this where it's consolidating and then shoots up aggressively. We go back to DXY, still have this larger VI we need to fill and a huge imbalance here. And NASDAQ, let's redo our analysis here. Okay, well. Higher time from dealing range in here to here. Premium, we have this gap we're filling right now, and as well as this one all the way up here. So if you took the liquidity in there, was no SMT, you take that 950 macro. Yeah, if we had displaced, if we obviously left this SMT, displaced aggressively, preferably at the start of the macro, took out the lows, and we formed a fair value gap, then I would have loved a short opportunity and taking out lunch low and previous day low. Long opportunity as well. If we had broken above this gap and formed a Judas swing at 930, then yeah, it'd be long. But there was nothing in here. I think that was high probability. We are trading above a higher time frame external range liquidity pool. Also Asian session high. I'm actually going to turn that off. So if we go back to our 15-minute chart, low to high put in between 10 o'clock and 11 o'clock, right? There's not really a 15-minute imbalance in discount. I guess we were trading in discount over here and then shot to buy side. These imbalances over here inefficiently filled, at least just this one. So you go back to the 5-minute chart. This gap right in here just has buying through it, no selling. like I said, that you could wait for 1030, look for your model. I can actually pull up the model PDF really quick. If you don't have this, here is this. Oops. Never mind, can't send it. Fantastic. So only if it wasn't efficiently filled, you'd use it as an inversion fair value gap. Inversion fair value gaps are, like, I'm using this now as a target for price, not as an inversion fair value gap. So I'd like to see it reach down into this section. Inversion fair value gaps are only utilized when you have a bias that's counter where the drawn liquidity is, right? So if we're trading lower like this, then yeah, all these fair value gaps would be used as sibis. As we shoot up aggressively, each one that we close above, you'd like to see it used as an inversion point. That also comes with order blocks as well. And you have to have, in order to use an inversion fair value gap, you have to have a bias on the higher time frame that means we should use it should utilize the inversion. If we're just drawing the inversion out and expecting it to hold just because it traded through it and is now touching it again, that's not what you should be doing, right? Just like how a fair value gap is not going to hold just because it's a gap, is the same way you use inversion gaps. So in this case, yeah, I'm utilizing the fact that we inefficiently filled this zone. We had just a large spike up here. Like, think about how quick this candle was and how many orders probably didn't get tripped in just because how quick it was. So I'm now watching for a potential sell model back into discount of this dealing range. Right, ran external, go to internal. And if you want to narrow it down, well, we have now this gap in here. Technically this gap as well, but when you extend it out, we have basically candle bias printing. There's a tiny portion right in here. I'm not too concerned about that though. Doesn't mean we have to reach down into here. It's just if we start seeing bearish price action, we hold this sibi and premium, trade lower, hold up fair value gap, whatever, then yeah, you could look for maybe a short. But like I said, you probably just want to wait for time. So 10:30. Why I'm trading lower, we do have a potential, if we can wick up into this wick here, maybe a nice fair value gap, trades back lower. Potential low risk, I guess, first stage of distribution, second stage of distribution, one of those two. Here we go. There you go. Now we have a breaker on ES. Potentially. I'm not saying that's going to hold for sure, but if it does hold that, then you could look for this as a up close and candle range, taps into the breaker. If we trade down, there's your second stage of distribution. Why wait for 10 a.m.? It's a good question. 10:30, sorry. A lot of times on 10 a.m. news days, price will either consolidate like this or run aggressively towards a direction and just be poor price action, difficult to find trades. 10:30 starts London close for Forex, which also applies. It's not an official kill zone really that's labeled within indices that ICT rarely talks about it, but it is a thing in Forex. Between 10:30 and 12, we have London close, and right at 10:30, really between 10:30 and 10:45, it's a little tiny macro in there where you can find trade setups. Silver bullet, I guess, where 10:30 normally you have a lot of time elements related between 10:30 and 11. So when price is spooling in towards a direction, you either have a retracement that starts at 1030 and find a fair value gap entry, or a run on stops. And think about this as just kind of a another kill zone start. So you want to see a Judah swing in some sort at 1030 and then continuation of your model, or a potential reversal. So retracement or reversal. I remember 1030 to 11 when we're trending wants to put in the higher low of the session. So in this case, we're continuing to expand above the 10 a.m. candle. No Judah swing put in at 9:30, which is a little annoying. But notice how if we do put in a high here, that would be at the wrong time, right? 10:15. And if we want to reach up into this premium balance here on the hourly, you would like to use an element of time. We also have, I guess that starts it, so it's fine. As you say, New York session high is a liquidity target. Nothing really above that I'm seeing, besides maybe this gap all the way up here. So if we do put in a swing high here, we start trading back lower. I mean, really, this imbalance is the one that should hold because we have this order block range. No, I don't have a specific video on Judah swings. There's not really much besides when you're looking for Judah swings, they have to happen at timed intervals. Yeah. So there's going to be a little bit of time distortion based on when the Judah swing happens. It can happen between 9 o'clock and 9:30, or it happens between 9:30 and 10. But the Judah swings happen at session or day opens. And using Judah swings and protractions are important because then you can start studying your London profiles. When do we start protracting? When do we sweep liquidity? Can't speak. Or are we just kind of search and destroy conditions where we're taking out both sides, trading lower back and forth? Like you can tell just from this in here, it's just repeatedly taking out buy side and sell side. It's not trending. It's not moving in one direction or consolidating tightly. I should already show you. Watch this fair value gap in here. We do have this order block ranged as well. The discount side of this imbalance here is New York session high from yesterday. So that would technically be, if you go to RTH, that would technically be your... Oh, never mind. Is that from 8:30? Is that why it's pulling it? Yeah, it's 8:30 high. That's why. Never mind. That would also hold a 5-minute order flow if you want to reach up there. For Friday's NFP at 8:30, will be trading at like 30 minutes or so after it starts at 9:30 a.m. An hour after NFPs at lower probability trading. So for any 8:30 news day, your highest probability setups are going to happen between 8:30 and 10 o'clock. Very rarely, or sometimes you can have a reversal at 10, which then produces basically a reversal setup going into 10:30ish. But think about if we're moving the kill zone back an hour, where the volatility starts injecting at 8:30, then you want to move your trading back. So I'm normally waking up on 8:30 days a little bit earlier, looking between 8:15 and 10 o'clock, I guess. If there's no clear 8:30 setup, something like NFP, obviously I won't be trading that. But on an 8:30 news day, like tomorrow, for example, if I pull up the chart and it's a clean setup going into 8:30, I may scalp that, use the 8:30 news as a volatility driver, towards the target. If that's not the case, then you look for your standard 9:30 continuation like this. You really only have 2 profiles for 8:30 news. That's high probability. 8:30 spikes up, we trade back lower. You have consolidation, 9:30 spikes the other way, and we complete the market maker buy model. Or we have 8:30 consolidates, it spikes up here, trades back lower, consolidates in here, 9:30 spikes the other way, and then it trades back lower into 10 a.m. and then it starts to reverse probably into lunch or something. This normally happens on Wednesdays though, or days of the week you want to see a market reversal be put in. On 10 a.m. red folder news days, can you trade between 8:30 and 9:30? Yeah, I mean, you can trade realistically between 8:30 and 9:30 every single day. It's just that a lot of times it's going to be a little bit less volatility. Those days they don't have 8:30 news. So there's no problem with looking at 8:30 and looking all the way to 10. I think your highest probability setups are going to happen between that time period anyways. As you get later into silver bullet hour and approach 10 a.m., it just becomes scalpy, right? You're kind of missing the majority of the AM session move. Like there's some people who just trade 9:30. I showcased a model using different things. The 9:30 model, where you could literally just scalp 9:30 news or 9:30 volatility coming to the market on high probability days, and just be done with that 15-minute candle, 5-minute candle that prints. Volume balance with a order block here. It should be in the model. It's not a finished model. It was really just a fun little backtesting thing. So the 5-minute chart, how it touched the fair value gap at 925. If using the 930 model, would you have scalped long then? Oh, like over here? It would have been difficult to scalp this 930. I don't really like scalping 930 unless there's a very specific profile that I'll use the 930 volatility to get in. And that's when price is either trading like this. You can flip it, I guess, both ways. But we're coming from a internal range liquidity pool on the higher time frame. So IRL to ERL. So we have some sort of time-based liquidity pool down here from previous session low, previous day low, whatever. And we have a 15-minute fair value gap that prints as well right in here. So hourly, this will be your 1 hour IRL. And then you have a 15-minute IRL in here. Price trades up into this at 9:15, 9:20ish. And it already prints a 5-minute candle that closes downwards, and we have a market maker model that's pretty clear on the 1-minute chart forming. Like we have first stage of accumulation all through up this left side of the leg. And then we have basically it trades up into this, and this is where 9:30 hits. So this will be 9:30. This is really the only model you can flip this on its head to for bullish examples. But this is probably the only model I like to use the 9:30 volatility to scalp and hold it for an extended period of time, like more than 15 minutes. Then we could use this 9:30 to reach down into previous X low, whatever, the ERL in here. Another example of the 9:30 news or the 9:30 volatility I like trading would be just the turtle soup. So if we got an obvious run above some sort of external range liquidity, either internally or on a higher time frame, and it's closing the other way, then sure I'll get in, maybe scalp 20 points or whatever. But anything outside of those two, I don't like holding 9:30. So in here, obviously we're not seeing either one of those models print. We're not scalping. If it swept lunch and started closing back up and we started trading the next candle a little bit higher, maybe consider going long in that, target this high. But that's really it. We're holding these bullish order blocks very well, but there's not really been a fair value gap entry that I would have liked. We have not returned into discount since then, and YM is doing the complete opposite. External range to internal range. I actually wouldn't mind a short in here off this sibi. 20 points is the minimum that ICT has said before early on in 2023 mentorship. 5 points on ES and 20 points on NASDAQ is your minimum targets daily for a trade setup. So that's just a simple target that I like taking, and it's what I've had a lot of experience doing, just scalping 950 macro in last summer, a bunch of different examples. So I just like taking partials at 20 points, especially when you're looking for, I think a good target for everyone is 20 points. And then when you get good at stuff and you're comfortable with your model, then looking for 100 points a week, whether that's, with one contract or with multiple. 100 points a week with one contract is, I don't know, like 96K if you use one mini contract on NASDAQ. Let me do the math really quick. What was that? 100 points times 20. Yeah, times 52. 104. Which in US is a pretty solid salary, I would say. So, just shooting for a nice 6-figure salary for a year and using 20 points per day, per week, whatever, is just a nice target to have. Plus, it doesn't even matter what the market structure is. It's just if you're looking for 20 minimum, you're looking for that. It's not going to be any less than 20. Anything past 20 for me, like within the 30 to 40 point range, I'm using market structure, and then really a 50 point run or more, I'm just either holding it for terminus or I'm closing out manually. So reach into that hourly imbalance on NASDAQ with no clean entry up until then. YM doing the complete opposite, trading lower. So you have SMT there, and ES starting to trade up. I actually did mark out the premium imbalances here on ES. Oops. Current daily range above it. Oh, we're already trading within one right now. Got this one up here too. Remember, on your higher time frames, so your hourly and 15-minute charts, your PD arrays you're looking for are very specific. In the backtesting stream, or I think it was last Thursday, just a live stream we did, the IRL to ERL video that's posted on YouTube, I mentioned all of the very specific external range liquidities you're going to be reaching for every day in the morning, right? It's going to be either previous day high, previous week high or low, London high or low, PM session high or low, and then your 1 hour market maker model targets. Same thing with fair value gaps. They're only going to be in premium or discount relative to whatever side we're sweeping first. So if you sweep buy side at the 930 run, we're going to be looking for discount fair value gaps. It's not going to just trade. It's not going to just run buy side, right? And then just trade down into here and be done. It's going to reach either below whatever daily range is parent to this run. It's going to reach into discount over here. Or if this is the parent daily range and we sweep buy side, it's going to reach into discount here. So remember, it goes from buy side to discount. So discount and buy side pair with each other. This is for your entire New York session, right? And premium and sell side pair together. And it'll only do one of these. It's not going to go from premium to buy side or discount to sell side. It's either going to go from discount to buy side to discount, or premium to sell side and sell side to discount. And both buy side and sell side are external range liquidity pools, right? So your external range liquidity is going to be all those ones I mentioned before. So it's going to be some sort of a previous X low or previous X high. And your IRLs are going to be 15-minute or 60-minute PD, or I'll say fair value gaps in premium or discount. So once you understand this, you can basically go back and look at every single morning session. And even, I mean, today was pretty difficult, I would say, but if you go to the 15-minute chart, right here at 9:15, it's outside of the kill zone, unfortunately. Well, it's not really outside the kill zone, but outside where we would be looking for. So we got to miss a move like this. But what is this? External range, right? You have London low, PM session low. So reaching from now, sell side, it's going to go from sell side to premium. So we know that it's not going to just reach into this sell side up to this gap, right? That's such a tiny move. It doesn't make any sense for it to reach up into here. So you want to use the parent daily range. Well, this daily range from high to low is subsequent to this daily range from high to low, which is then subsequent to this daily range from high to low. We don't need to go even higher than that because, we're not going to use this one. That's just too far back. Preferably, you're going to be using a 3-day look back for your 15-minute chart, hourly chart. Anything past 3 days, you may be looking for previous week low or a continuation of your entire week's market maker model. But most days you're going to be looking for 3 days previously, and that's going to be all the liquidity you need for targets. So in this case, we went from sell side to premium, and that premium is going to be an IRL 15-minute, 60-minute pre-value gap in premium. So if you go to 60-minute, mark out your dealing range from high to low, parent one, we have this gap, which we're already traded into, and we have this gap that was untraded into. So sell side to premium. If you go and study just this, you can find extremely high quality setups. Like we did this last time, but all your New York sessions are doing the same stuff, really. So you're going to be running out buy side like this, buy side right here, 930, and we're going to go for not sell side. We're not going to reach down into here. We're going to reach for a discount and bounce. If I put this on replay mode, right in here, wherever it stops, right at 11 o'clock, right? That's time based too. 11 o'clock, 10:30 to 11, you'll see the low put in. So if you go to 15-minute chart, there's going to be a bounce somewhere over here. The price is reaching into. Well, we do have some lows in here, but there's tiny imbalances in there. You can go to your 5-minute as well. Look for any imbalances. This is on Wednesday. Where's 9:30? Yep. Premium to discount. And you can look for as well, are we trading into a higher time frame imbalance up here? So you go to your imbalance, mark these out. Well, we are also trading within an hourly imbalance right at 9 o'clock. So that would be your IRL and then ERL. So you have ERL down here, ERL down here. And it's also helpful to just look for the consolidation profile. So if you know this is a hourly swing low, there has to be 5-minute consolidation below this to confirm it as a target. Right? It's not going to just reach for a swing low. It's got to have consolidation on lower time frames. So this to me is not as clear as something like that. Anyways, you can go back and watch that video. There's more examples and in-depth stuff, but we've already reached up into here. Here's 10:30. Unfortunately, I probably won't find any setup in here. See, after this 10 a.m. run, there was no reach back into discount. Trades back lower. This is not in discount. This is not in discount. This is also not in discount. So, I mean, if you want to look for a reversal profile, you could. But I'd rather just save capital. Isn't that a market structure shift, though? Maybe I missed what you're saying. Probably. Isn't this massive bullish run quite unusual? It is very unusual to not have. It's unusual for the fact that we didn't have a Judas swing on any of them. NASDAQ, we don't have to have it, but you want to see ES run lows. So this 930 candle creating the low and then running 100, 200 points in one session prior to Fed chair speaking is a little unusual. I'd say, yeah. Do you ever enter strictly on CSD so long as your displacement candle isn't massive, or do you always wait for retracement into a PDA first? I would prefer if the CISD is paired up with something like a higher time frame for value gap. So if we're reaching into, I mean, even then, like using a CISD without displacement like this, like I didn't go short off of this up closing candle just because there was no displacement. It was very lethargic moving lower. Same thing in here, lethargic moving lower with no gaps. So the only reason I would trade off a CISD is if we're reacting off of immediately at a time, so between 9:30 and 9:45, a 15-minute order block or fair value gap. Sorry, 15-minute fair value gap or sell side bias of liquidity. Or we're trading into a 5-minute fair value gap and then prices leaving on the 1 minute, which then you can find a CISD trade setup to form. So like in here, if you extend this 5-minute fair value gap over, yeah, we trade into it multiple times, but the CISD you'd be looking for would be your last up closing candle, this one. That's difficult to trade. We trade lower, you could look at this as in your order block to short from. And you can see price doesn't even hold it in here. With one candle, boom, shoots all the way above. CISD though is just, if you put it in order of entries, it's turtle soup, then CISD, then low risk entry, then first stage, which would be breaker, plus fair value gap, so I guess unicorn, and then silver bullet. Like these are the only entry techniques you have within a market maker model, because everything is market maker model anyways. So CISD is extremely hard to find most times and requires a lot of context, just like how a turtle soup is extremely hard. So CISD and turtle soup, I think, are both like A tier entries, meaning it's going to be extremely hard to find high quality steps. You need a lot of context. Everything after that, in terms of difficulty, is, silver bullet's going to be your easiest one. Breaker per value gap, second easiest. Low risk entry, third easiest. Yeah, no problem. But if you go back and like watch the executions I have on YouTube that use a CISD, there's a ton of framework behind it. It's not just, oh, we're reacting off an order block because we just reversed. Like that's just trading a PD array, like everything else. I'm gonna look for SMT up here. Reason being, it's time based, so it's 10:30 right now. Trading to a higher time frame for value gap. If we wanted to reverse, all of your reversal signatures are going to frame some sort of SMT at the highs, mostly between NASDAQ and ES. So we do have some there. Right in here. Right? So we're definitely zoomed in here. This is not oh, what the heck? 20 points. I guess that was an aggressive run up, right? Tiny imbalance in here. Also trading to this one, so we're bouncing between two. Breaker in here. If we run into this gap, trade lower. We have an order block range on top of that, then be nice silver bullet short. Is it possible that this consolidation could be considered our original consolidation for the market maker sell model? On a higher time frame, yeah, I think so. Also, classic Tuesday low of the week. Go to the hourly chart, you want to see a market maker bottom all starting to form. Definitely a difficult one. It's going to be somewhat high res since we have a lot of imbalances here from Monday and Tuesday. But look at all the relative equal highs up here. It's pretty juicy if we want to reach all the way up into there. But I mentioned, I think on Monday or Tuesday, seasonal tendencies are going to start coming in. It's not a guarantee, but 20, 40, 60 day you have to look back if you want to start doing that stuff. It's not super important, but this is definitely probably one of the hardest weeks we've had all year, at least for me so far. Like Tuesday, difficult entries, ran aggressively prior to 9:30. Monday was not the best either. Kind of just ran up aggressively, extended Judah swing, prolonged Judah swing here. So this is something you could get, right? 9:30 does not sweep liquidity, but instead aggressively runs up into 10 a.m. And now you have your prolonged Judah swing between 9:30 and 10. This creates the high of the session. We break down and continue to form a market maker sell model after that. I try to get in short, I think, right in here, right? And I put a stop at the rejection block, so at the high. So I got stopped out there. But I mean, that's a somewhat of a more difficult profile. It is a Monday, I guess. Tuesday, difficult. Wednesday, also pretty hard. I mean, you can assume tomorrow's going to be hard, but we'll have to see. 8:30 news, like tomorrow, I don't know if we'll stream. I may take a 8:30 trade. We'll see, or 9:30. It'll probably be a short stream tomorrow. Expect maybe a 9:20 to 10 o'clock stream. I'm not going to stream after 10 o'clock, especially with NFP coming up. Holding this at fair value gap here. We do have that tiny order block right next to it. And if obviously we want to reach all the way into discount, high to low, at least from here. We have this fair value gap. I'm going to extend this out. This gap, and if you want to take your higher daily range, then all the way below this low, we have sell side liquidity internally. Could also be a nice market maker sell model. We don't have clear original consolidation on here. It's a little hesitant, but I probably would not want to take that high out if it's possibly an intermediate term high. Oh, there you go. So nothing. It's not a clear short setup, I don't think. If you want to use this as a CISD, then maybe. We're also in a higher time frame for value gap and premium. So you look for sell side. Or maybe a London session stream. I'll do it. No one's going to be up though. So market maker sell model hunts a market maker buy model original consolidation low. Yes, correct. And that original consolidation is going to be on a specific time frame that then pairs to a higher time frame, IRL or ERL. So if we have 1 minute consolidation, it's going to go 15-minute swing low or premium side of a bisi, discount side of a sibi. Why is that original consolidation, and why did you say that's important at 10 a.m.? This low, right? That's a good question. So if we were to look at this as a market maker sell model, my eye immediately goes to this being the buy side of the curve, and then this being the sell side of the curve. So in a market maker sell model or buy model, there's going to be multiple stages of price delivery specific to, really it's going to be multiple stages of price delivery. It's going to have one vertical consolidation, then first stage accumulation, second stage accumulation, smart money reversal. So if I'm kind of working backwards and we're treating this 1030 candle as the high, I'm looking back for areas where price is accumulating. So I'm looking left. Well, we have a down closing candle here. Look left. Well, we have a tiny one there. I'm not really picking that up as much, but we could use that. So 1, 2, an area of 3, and we have a swing low formed right here. So if I go even further, yeah, we have consolidation down here too. If you wanted to use this as a larger market maker sell model, or you could actually use that too. But I'm looking at this as a potential starting point for the market maker sell model. So whether it's this is the starting point, whether this is the starting point, I actually looking at this makes more sense to me. So if we drop down to a lower time frame, something would be like a 15-second, there may be something in here. Like if I drop down to a 5-second chart, there probably is something there. Go back, what time is this? 10:10. Yeah, so on the 5-second chart, we do have some consolidation down there. Here's what it looks like. So actually, if you look at this as a market maker sell model, I would prefer if this range down here is ran out and the previous day low, lunch low anyways. So in other words, you're looking at 10 a.m. as your target coming down because it's more significant consolidation. Yeah, exactly. On the 1 minute chart at least. You're not going to be really using anything sub 1 minute. I was just saying that 1 minute pairs to 5-second. So yeah, if you have a swing low here, obviously, or if your value gap here, then above it or below it, you'll have a specific time frame where the consolidation is forming. Do you ever look at OTE? This big move just went from one smaller price like OTE zone to the parent price range OTE zone. I don't. It was something I used very early on. I thought it was great. I just moved away from it because it's just like, for me, it's fib extensions. I don't use it specifically, like standard deviations. I mean, like, yeah, if you want to do, you could pull this, and I'm sure it probably reverses right at 2 to negative 2.5. Kind of, not really. You want to take this leg, whatever. Start measuring this. But there's so many tools that you have to pick and choose which ones you want to use. So I don't look at OT anymore, unfortunately. But it is a great tool. I think if you pair that with a specific fair value gap you want to trade into, you don't need order blocks. You just need OT plus a gap. And that's a solid move right there. Not really getting any movement in here. So, I mean, preferably we do see a market maker someone at least to this low, maybe down to original consolidation low. I don't think we'll reach down into there unless it's a full-on reversal of the daily candle. So we'll go ahead and wrap it up there. I'll make sure to post today and yesterday's stream recording up on YouTube, and I'll send the links over. So stay safe the rest of the day. If you took some trades, make sure to journal them, review them. Loss or win, doesn't matter. Follow the plan. Yeah, appreciate you guys joining as always. We'll see if we do the London session stream tomorrow. Probably not, but hey, if it's a good price action, I'm down. We'll see you guys maybe tomorrow, but Friday for sure, Lord willing. Take care of yourself. Peace.